Risk warning. All trading is high risk and one of the most difficult activities you will ever consider. To succeed, it takes time, effort, hard work, discipline, and determination. And there is no guarantee that you will succeed. Most traders lose money, and some lose all of their money and more. You should only ever use money you can afford to lose. And if you do not understand what you are doing, stop immediately and find out. This is real money. Millionaires journey Forex will not accept liability for any loss which may arise directly or indirectly from the content on this course in any way, or in using our trading style and any ideas that we share. Trading suggestions in whichever of various markets you choose to trade, or using whatever instrument. We are not financial advisors. You alone is responsible for your decision and capital. Hi guys, Sebon from Millionaires Journey. We are continuing with our trading strategy breakdown. On the last video we talked about trendline trading, where I said you need 2 points for a confirmed trade. For a confirmed trend line, then you need the third point for executing a trade. This time we are looking at a trend line breakout. We are looking at a trend line breakout and what to do on the break of the trend line. So how to see a breakout, buy and sell example, what to do when you see a breakout, where to put a stop loss, and we'll look at some false breakouts. So let's start with how to see a breakout. On the video that I was talking about, I said a breakout is confirmed when the market closes above or below the trend line. So that's how you confirm that the trend line is broken. So we have our point A here, we have our point B. So we have a confirmed trend line. And then something different happened on point C. The candlestick closed above this line. The candlestick closed above this trend line. That could mean a possible direction change. We are now looking for buying opportunities. So this is how you see a breakout. If a market closes above the current trend line, that means that trend line is now broken and we can start looking for other trade directions. As you can see here, we had point A, we had point B, and then on point C we had a breakout, right? We had a breakout, but the market came in again, but eventually continued down. So this was a tricky trade. It needed a wide stop loss to catch it. But then you see, if the trend line is broken and it's not a false breakout, you can enter good trades, you can catch good pips. So you need to wait for a candlestick to close below. So let's say this is a trend line. You need to wait for a candlestick that will close below that trend line. You need to wait for it to close below that trend line. Then you can start looking for selling opportunities. You can start looking for selling opportunities. That's how you can look for how you can see a breakout. So here, if you can see, we had a lot of touches on this trend line. We had a lot of touches with A, with B, we had C, then we had D. Now we are waiting for market to give us another touch and push up, or we are waiting for market to close below this trend line, and then we can start looking for our selling trades. We can start looking for our selling trades. Should the market close below this trend line, then we can look for our trades. You need to be patient. You see on this here we had a trend line. I'm sure there were touches there. Maybe this is touch number 2. This can be touch number 2 or number 3. But look what happened as soon as the price closed below above that trend line. If you had entered here, you would have made a lot of good pips, you know. So also again, you would have used the trend line trading strategy to catch this trade, like A, B, and then buy on C. You see, then you would have caught a very good pips. So you need to be able to see point A and point B, and then you wait to see what happens on point C. If the price breaks on point C, then you can start looking for that sell or a buy. But if the price reverse, you can still look for a sell or a buy, you know. So here we had two confirmations. We had 2 confirmations, as you can see here. We had point A, point B, and point C. You would have bought on point C, and then you would have bought again when the price breaks this trend line, and bought again when the price breaks this short-term trend line. You see, I'm not saying it's easy, but as soon as you master seeing point A and point B, you can make good pips. You can make very good pips. If you are using the trend line breakout strategy, you can make pips anytime. As you can see here, we have point A, we have point B, then on point C you see the price broke, and you will have caught some very nice pips. If we are talking about pattern, this is a continuation pattern. So you need to be able to see these things. You need to be able to understand point A and point B, and then you need to understand a breakout. Remember, for a confirmed breakout, the candlestick should close below the trend line if you want to sell, and if you want to buy, it should close above the trend line. See, so if the market has been respecting like A, B, C, and then on D you get something like this confusion, a close below, a come up, and then so you can take this as a pullback to confirm that trend line, and then you can catch a trade. And if you had missed that trade, you can catch it here, point A, point B, point C, then on point D it broke, you would have sold and set your stop loss somewhere here, and then the market would have come and turn near your stop loss and start pushing down. Remember, do not exit the trade unless it hits your stop loss or you take profit, because that's how you can stay in trades long enough to see what they actually do. Sometimes you can exit the trade before, only to find out that it was going to hit your take profit. See point A, point B, on point C it broke, and then if you sold here, you would made pips because it's potentially coming to this blue line down there. So I hope you understand a bit on how to see a breakout. To see a breakout, you need to have a confirmed close below or above the trend line. So let's look at some example and what to do when you see this breakout. Firstly, whenever you see a trend line breakout, you can do three things. You can enter a trade, or you can leave that trade, or you can wait for a pullback. I will explain all these things. So for example, here we had point A, we had point B, and then on point C the price broke and then started pushing down. The price broke and started pushing down. So This is a very nice sell setup. It's a very nice sell setup because the uptrend has just been broken, and we see that the market is testing the structure. We are looking to be selling. We are looking to go with it to the downside, so if you're wondering what to do when the price break, you can either sell here, wait for it, right? You can sell here or wait for price to come touch this trend line and start pushing down, or you can do nothing and let this trade pass you by. So let's look for another example on what you can do. Like for example, let's say you have point A, we have point A, we have point B, we have point C, and then we have this breakout here. On this breakout, you can either let the market go without you, or you can catch these pips up to this level, you see, and then you let the market give you another trade. See point A, point B, and then on point C it gave you a breakout. You can sell immediately when it breaks out. So what I'm trying to say here is that the market, it can sometimes come to test the trend line, but sometimes it doesn't. It just starts selling off. You need to be able to you need to see that, okay, now the market is breaking out. Like here it broke out close below. You would have sold here and set your take profit somewhere here, or let your stop trail your stop until the market takes you out. You see, even here we have 1, 2. The market can give us 3 and then continue pushing down. It's about patience. You need to wait for the market to confirm this, because I can preach this, I can show you all of this, but if you are not patient, all of this will be a waste of time, because without patience the market won't you will lose money on the market. Without patience, all you'll be doing, you'll be losing money. So you see here, look at this, we had point A, we had B, and then on C we have a perfect close below. So you can sell here, right? You can sell here and then set your take profit down there where at the first at point A. That's where you can set your take profit and then wait. See, so if you have you entered at this candlestick, you would have made this much. You would have made all of those pips. That's what's important, getting those few pips a day. It's not about making millions a day, it's about small steps. You are taking it small step. As long as you can master point A and point B, then be able to be patient enough to wait for point C. That's when you can start having that edge. It's not as easy as it seems now that I'm saying it, but it takes time. You need to practice, and then you'll start things starting to work out. You see things starting to work out. You don't enter unless you see a confirmed breakout. See, because the market can come here and then before it even breaks, you think that the price is broken, and then you see it pushing up. You need a confirmed candlestick close below that trend line, because the candlestick can do this and then go back and form something like this. So you need to wait for it to close below or above that trend line. That's when you can have a confirmed trade. Let's look at the last example. You see here, we had point A. That's how we confirm this trend line. Point A, point B, and then on point C we had this breakout, and then you just buy it here and set your stop loss and set your take profit at point A. Your point A is always your take profit. The price is likely to push and get to that point where it started that trend. If you are looking to be selling this, it can be point A, point B, and then if the price comes here, you sell and set your take profit at point A. That's what we are doing here. Master this. Do one thing 10,000 times. You will start getting that trading edge. It takes time, but it's worth it. It takes time, but it's worth it. So let's look at another topic. So where to put your stop loss and take profit? I just told you where to put your stop loss and take profit. So if you are trading a breakout, your stop loss can be on the previous low. Your stop loss can be on a previous low and your take profit can be on point A, right? Your take profit can be on point A and the stop loss can be at the previous low. You see that this is a 1 to 10 or 1 to 20 trade. You are risking 1% to make 20% or even 30%. You put your stop loss at the previous low, or you put your stop loss at the previous low and you take your 1 to 3. You take your 1 to 3. You don't have to get to point A. Depends on your trading plan. Let me show you another example. You see here, you put your stop loss on the previous high for a sell trade. You put your stop loss on the previous high and you put your take profit on point A. But as you can see, that point A is so close to this level. You would have got these pips, but it depends on you. So this would have been 1, 2. It would be 1 to 2. So you would have risked 1% to make 2%, putting your stop loss to point B. This is for you if you are trailing your stop and you understand the market structure. You'll understand where this blue line is coming from when we explain the market structure. Let's look at the last example on take profit and stop loss. So sometimes the rule that says put on the previous high can be a problem, because see that this high is so far from the entry. This would be a wide stop. So this is where you use your trading plan. Let's say your trading plan, it says 30 pips, then you would have enter here and set your 30 pips somewhere here, and then your take profit on point A. This would be 1 to 2 trade, risk reward trade. So you need to understand these things. So you don't need to say, because I said you need to put your stop loss at the previous low, previous high, and you go to the market to start doing that. You need to be realistic. As you can see that the previous high on this one is very far from your entry. Imagine your stop loss here and then your entry is here and then your take profit is here. This is a very, very risky trade because you'll be losing a lot. You need to use logic. Let's say you just set your 30 pips or on the previous high of this candlestick, because this is a very long candlestick. You just put it where the candlestick started and then you enter your trade. The stop loss can give you a break, because you don't check on the market always. You just know that, okay, I've set those trades and they are running. But if you don't have a stop loss, it can be a problem, because you'll keep on checking the market. You'll keep on checking the market because you are worried that you might be losing more than what you initially invested. So, talking about a false breakout. False breakout is when the market breaks out of the trend line and then goes back in. Let me see, maybe we can get a few examples. Let's see here. You see here, yes, we have the example. We have point A, we have point B, we have point C. On point C, the market broke, pushed down, and then came back in to hit your stop loss and then started pushing down. That's a false breakout. So if you have a point A, a point B, and a point C, a breakout, and then the market breaks out and then comes back in and then start respecting the trend line, you can consider that a false breakout. Now, you cannot know if the breakout is false or the breakout is a true breakout, because you don't know. You cannot know because we don't know how the market moves. For example, look at here, we had point A, point B, point C. Then let's say when it gets here, it breaks out, you take your sell and then it starts coming in and doing this. That was a false breakout. There is nothing you can do about a false breakout. But when you combine this strategy, this breakout strategy with trading structure, now you can see when the false breakout can happen. But we will get to that side when we are putting all these trading methods together into one strategy. Remember, it's a 4-piece strategy and you need to know it all, then combine it and trade it as one. So if the market comes here, you sell and then you start seeing it go up. You don't have to be stressed on whatsoever. You need to accept that sometimes we will lose, because that's a false breakout. There's nothing you can do about the false breakout. The market can do this A, B, and then when it comes to C, it breaks out and then comes back in. There is nothing you can do. It's a false breakout. That's the market. Sometimes you'll win, sometimes you will lose. That's how it works. So you need to accept that sometimes you'll win, sometimes you will lose. I thank you for watching this video up to this very end. Let's meet again on the video where I'll be explaining trading patterns, and the other one where I'll be explaining trading market structure. And then after that, we are putting all these pieces together, and then you will be going on your chart and I'll be going into my chart and analyzing live with you, where you'll be seeing when I analyze and what I look for. I'll be explaining step by step. So thank you.